Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering Disney. Disney is going to need to come up with billions of dollars in cash. The cash they come up with is going to be used to pay off the 1/3 stake they do not own of Hulu. That money goes to their competitor, Comcast, who has already announced they're going to use the money to buy back stock. That raises the price of the stock of Comcast. Exactly where Disney is going to get these billions in cash from is completely unknown. They do have a number of sophisticated ways they can raise money. Bob Iger did raise over $50 billion to pay off buying Fox. So can he come up with $15 billion or $20 billion to pay off Hulu? Yes, he probably can. But it is going to change the nature of the company of Disney when he raises that much money, particularly because their stock is absolutely low right now. It's much lower than it had been over previous months. Right now, it's at $79.89. It's very much near the 52-week low. And if it goes below $79, it's going to be consistent with Disney's price from years past. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I really appreciate you guys. So this is coming from Financial Times. Financial Times is like the UK edition of the Wall Street Journal. They're very in-depth. They're very well respected. They've got a great coverage of this story. Bob Iger and Brian Roberts lock horns over kingmaker's asset Hulu. Disney and Comcast prepare for battle over the price of full ownership of the streaming service. Why is this asset so valuable? Why is it so important? Well, take a look at this article in Variety. Which streaming service cancels TV services at the highest rate? This new study sets the record straight. Warner Bros. Discovery's Max service has the highest cancellation rate. Disney Plus is at 21.1%. Hulu is at 15.2%. Part of what protects Disney Plus is their bundling with Hulu. And Brian Roberts is well aware of this. He's mentioned it publicly. He says that alone is worth $30 billion. Because if you subscribe to Hulu, but you, quote, also subscribe to Disney Plus, you're much less likely to cancel Disney Plus if you're already subscribing to Hulu. Comcast doesn't have that advantage. They have Peacock. Peacock has a 10% cancellation rate. Would Peacock like to have the benefit of Hulu? What would be the cancellation rate of Peacock if it was sold as an add-on to Hulu? It would certainly be less than 10%. We don't know what that number would exactly be, but if you can compare the numbers of the roughly 5% difference between Max and Disney Plus, you get a sense that, it could be worth 5% of cancellations. That's a very big deal, and it makes the value of Hulu all that much more. It's not completely certain that Iger is going to have the money to pay for Hulu, and it's not completely certain that Brian Roberts from Comcast, who owns 1/3 of Hulu, won't demand the opportunity to be able to acquire Hulu. In February, Disney chief executive Bob Iger surprised employees and investors by saying that, quote, everything is on the table regarding the future of Hulu, adding that its content was undifferentiated. Many assumed Iger was ready to jettison the streaming service, but just 3 months later, Iger said his remarks had been a little harsh, insisting he was planning to keep Hulu and integrate it with the Disney Plus app. By early next year, Iger will have discovered how much the decision to hold on to Hulu, home to shows such as Only Murders in the Building and The Bear, is going to cost him. On September 30th, which is coming up very quickly, Iger's team will begin a months-long negotiation process with Comcast to determine the value of the cable giant's minority stake in Hulu, setting the stage for Disney to purchase it and gain full ownership. It's 1/3 of the ownership of Hulu that's still owned and controlled by Comcast. Disney and Comcast have been in an uneasy relationship over Hulu since 2019, when Iger's company gained a 66% stake in the streaming service through its acquisition of 21st Century Fox. Comcast holds a 33% stake, and the two companies agreed at the time that either could initiate a sale or purchase of all of Hulu at a minimum valuation of $27.5 billion. It should also be said that Disney was able to acquire Fox only after Comcast increased the price of the acquisition by $20 billion, because Comcast went and negotiated to acquire the Fox assets as well driving up the price. Iger is stuck with an additional $20 billion worth of debt because of Brian Roberts, the guy he needs to negotiate with now over Hulu. This also shows you that Brian Roberts is incredibly sophisticated, and keep this in mind as well. He's in a competitive business with Disney. They both have film studios. They both have animation. Comcast Universal has actually been beating Disney in animation lately. They have cable channels they compete with. They have broadcast networks they compete with. And they're both going to fight over Hulu. The process of determining the value of Comcast's stake was expected to begin sometime next year, but the companies recently agreed to start it sooner. Wall Street analysts admit they have no idea how it will play out, but the consensus is that Disney will end up having to pay at least $9 billion for the 33% stake and possibly much more. Because Comcast has stated publicly now they plan on buying back shares with the money they get from Disney, it's less likely that Comcast could accept stock because it needs to be immediately liquidated to generate the cash to buy back Comcast shares. Buying back shares when you're a public company is very similar to the concept of a dividend, taking shares off the market, and it's like a return of cash to the people that still hold the stock. Brian Roberts, Comcast chief executive, called Hulu a kingmaker's asset at a Goldman Sachs conference this month. He argued that Hulu's value has increased significantly since 2019 and suggested that a fair price would be around $60 billion thanks to potential synergies and a reduction in customers' churn if it's bundled with Disney Plus, its flagship streaming service. He's completely right about that. It doesn't matter if Disney has the cash available or not. The value of the asset is the value of the asset. It is worth a lot of money, particularly because if you have a streaming service attached to it, yeah, there is less of a chance of cancellation, and yes, you get extra distribution for that streaming service. Peacock would have been able to sell many millions more subscriptions if they had control of Hulu. Quote, Hulu is a great business, Roberts said. I think if we're selling all of this as is, there would be a line of bidders around the block. However, Disney will want the Hulu value to be set as close to the $27.5 billion floor value as possible, analysts say. Any payment above this level may put pressure on Disney's equity, Citi analyst Jason Bazinet wrote in a recent research report. Hulu's valuation is apt to make someone disappointed. Either Disney will pay more than investors want, or Comcast will receive less than investors expect. Reaching an answer to this dilemma is expected to take at least until the end of this year, following 2 and probably 3 appraisals of Hulu's value. Both companies will appoint an investment bank to act as an appraiser. If the two sides arrive at a price within 10% of each other, Hulu's value will be set at the average of the two figures. Analysts see this as an unlikely outcome given the difference expected between the values assigned by the two companies' bankers. If they fail to settle on a price through the first process, then a third bank will be hired to come up with a value for Hulu. In that case, the final value would be the average of the two closest of the 3 estimates. Quote, there is a wide range of valuation outcomes given the unique nature of Hulu as a business and the role of what will likely be 3 arbitrator valuations to deliver the final value, Morgan Stanley analyst Benjamin Schwinburne said in a research report. What they're talking about is it's probably going to be that Comcast is going to come up with a very high number, Disney's going to come up with a very low number. They already have in their agreement that a third party will come in and give their number, and then it will be averaged out, and that will be what the number is. Jonathan Chaplin, an analyst at New Street Research, said in a report that both parties have an incentive to deliver a reasonable valuation since the outlier among the 3 valuations will be discarded. Chaplin said, we don't know where this will land, but added that he expected the number to be higher than the $27.5 billion floor value because that would assume no change in the value and no synergies for Disney. The stakes are high for Disney, which would need to raise money to buy out Comcast's stake through a debt offering if the valuation goes above $29.5 billion, according to Citi estimates. With Disney's shares trading nearly a 5-year low, it's unlikely to pay by issuing stock. At the end of the most recent quarter, Disney had $11.5 billion in cash on its balance sheet. But of course, it does need that $11.5 billion in cash to operate and finance their business. They can't just take that $11.5 billion and send it over to Comcast and say, hey, okay, done deal. No, they're going to need to raise money one way or another. They will probably have to issue some debt. I'm predicting they issue convertible debt because convertible debt is usually traded in for stock, which means they wind up issuing additional stock, which doesn't actually cost the company anything and just dilutes all the other stockholders. It's like inflation. You just get less for your value. And I think that's why a lot of this isn't being talked about that much publicly right now, because with Disney's stock price where it is right now, it's not going to go up when they issue a lot of extra shares to pay for their acquisition of Hulu. But realistically, where are they going to get the money from? They're going to get the money from the stock price. It's hard to believe they're allowed to do this, but they are allowed to do this. They can just issue debt. The debt gets converted to stock, and then the stock is essentially generally reduced by the issuance of more shares. Investors have already shown some concern about Disney's cash flow, analysts said. Last week, Disney said it would double its spending on theme parks to $60 billion over the next decade. The shares dropped after the announcement due to investor concerns about potential pressure on Disney's free cash flow until those investments start to pay off. Iger has also pledged to start paying a small dividend by the end of this year. Iger and Roberts, both long-serving media chiefs, have competed against each other for decades. Roberts made a failed hostile bid to buy Disney in 2004 when Iger was president and chief operating officer. In 2018, Roberts offered Rupert Murdoch a higher price for 21st Century Fox than Iger had already made, forcing the Disney chief to raise his bid significantly. The bidding war pushed the final price paid by Disney to $71 billion, a sum that has been criticized by some shareholders as too high. The Hulu negotiation comes as Iger is seeking to cut costs and exit declining businesses. Disney's streaming business is expected to lose money until at least 2024, and Iger has floated the idea of selling Disney's traditional TV assets, such as the ABC network. He has also acknowledged that some of Disney's movie studios need to regain their creative spark. Disney does not break out Hulu's profitability, but in its most recent quarter, the streaming service's operating income and revenues grew thanks to higher prices and an increase in the number of subscribers. Hulu had 48.3 million subscribers in the third quarter, up from about 30 million in 2019, with average monthly revenue for each subscriber rising by $12.39 from $11.73 thanks to price hikes. Hulu's daily average engagement is second only to Netflix, according to Morgan Stanley and Nielsen. Roberts argues that Hulu has appreciated in value since 2019, despite the turn in investor sentiment against streaming. Quote, "The company is way more valuable today than it was then," Roberts said at the Goldman Sachs conference. "We're excited to get this resolved." What I think is going to happen is there's going to be a big dispute between Bob Iger and Brian Roberts. Bob Iger currently controls Hulu and has access to Hulu to do what he wants to do with it. He doesn't need to give money to Brian Roberts over that. This looks like another lawsuit waiting to happen as far as I can see it. It reminds me of the Disney lawsuit with Florida, where they're suing each other back and forth. Bob Iger knows there's no chance they're going to win in Florida to control the Reedy Creek district. He also knows, of course, he's going to have to pay if he wants to own the 1/3 of Hulu that they don't already own. However, he's not above using legal methods to delay things to be to his advantage. Eventually, interest rates will go down. They'll be able to raise money that much more easily. I'm sure he's looking at a number of options, but I would not trust Bob Iger as far as I could throw him. This is a true crisis for Disney, especially with their stock tanking the way it has been tanking. I do not see a quick resolution to this issue with Comcast, and I can't see how this will be a peaceful resolution unless Disney is forced to make a deal instead of Comcast buying out Disney's 2/3, which Disney certainly doesn't want to see happen. Let me know what you think of all this in the comments below. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.